Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on Ralph Lauren, ticker RL. Now why are we doing analysis on Ralph Lauren? Well, the main reason is we've never actually done analysis on it. It did have earnings about a week ago, did do quite well, and it was why we started to bounce. And it is one more that you may not look to trade, but maybe a longer term trade, or at least not a short term trade, maybe a longer term trade or one that you look to invest in. So it can still be helpful to have some levels on it. Now to get straight into it, we're currently sitting at $105, and this is just key to note because it means we're currently sitting in the range of a statistical mean. So right now we wouldn't look to touch it at all, because in the area of 105 to 109 the stock will most likely be very choppy, and we would at least wait for it to break to either the upside or downside before touching this stock. Now if Ralph Lauren continues its up, or at least short-term uptrend as it is right now, where do we see it going? Well, really our first target is going to be this $115, with a very close one being $117.50 right after. These are first deviations, so if we were long we would be looking to lock in profits coming into these areas, and definitely probably moving our stops so we at least wouldn't make a loss on the trade. But we wouldn't be looking to short right here just because it's the first deviation. If you understand how standard deviation works, 68% of the data will be within these first deviations, but that also means over 30% will be outside of those first deviations. So instead we would wait until it pushes up even further, and in this case that would be 124 and 126, and this would be the second deviation. So again, if you are long these areas, we would be looking to lock in profits. If you were looking to short it, this would be the area where we'd start being, or turning a bit more bearish on it and having a bit of a short bias on it, and yeah, the level that we would look to start shorting. And again, if prices continue even further, then we're going to have the third deviation at $134. And again, if you were long, this is where we'd look to be out completely, and if we were looking to short, this would kind of be that key level that we'd start shorting at. The reason for this is, at least on a theoretical standpoint, 99.7% of the data should be within these green deviations. So shorting at this level makes sense because it's unlikely to continue, but obviously it always can. You never know how markets are going to react or how an individual stock will react. But on a statistical basis, it shouldn't really break outside of this area. So we look to short coming into this level, and that's why we also close out the trade completely if we're long at this level, just because again we don't expect it to go any further than here. So just locking in profits here usually will catch the top. Now if prices instead end up falling, where are our targets going to be? Well, we're going to have the first deviations being at $100 and $95. Again, these are the first deviations, so we're probably unlikely to buy this level. However, if you are looking to invest, then first deviations are still solid areas to be investing in. But instead, if we're looking to more trade it, then we'd be waiting for prices to continue down even further to the $92 and the $85 level, because this is the second deviation on the 4-hour and the daily, and these are the areas where we would expect to start seeing the bounce, to have a proper bounce. So yeah, definitely areas that we would look to be a bit more long bias on it. But again, if prices do continue to fall, which is always possible, at $84.50 and then the 75 cents, or $75, sorry, these are our third deviation. So again, just like we said for the third deviation on the top side, the same with the bottom. If Ralph Lauren comes down to this $85 and $75 area, we wouldn't really expect it to go much lower than here, so this is where we definitely look to be buy it up, whether that's with shares or options. And if Ralph Lauren, that we do see it come down to $80 or below, I will make an updated video on it because it is something I am going to look to actually trade, most likely with options. But these are the key levels that we're looking at, and again, like I said, between where we are now, this 105 to 109, I'd really wait for it to push out of this level before trading, just because in this area it's likely to be choppy, so you may get kicked out of your trade, and instead just wait for it to push to either $115 or come down to $95, because then you're going to have a bit more clearer sense of direction. Anyway, I hope you enjoyed the breakdown on Ralph Lauren. If you did, don't forget to drop a like and subscribe. Hope to see you in the next one, and that's it. Peace.
And maybe I'm crazy,